Wall Street's main indexes ended sharply lower on Thursday, with the Dow dropping 1.3%, the S&P 500 sliding into correction territory with a 1.4% loss, and the Nasdaq plummeting nearly 2%. Investors remain on edge amid escalating tariffs. In the latest episode of President Trump's multi-front trade war, the European Union responded to blanket U.S. tariffs on steel and aluminum by imposing a 50% tax on American whiskey exports. That prompted Trump to threaten a 200% tariff on imports of European wines and spirits. Investors were also rattled by wrangling over the stopgap bill to fund the government, said Shana Orsic-Sizzle, founder and CEO of Bonrian Capital Management.
Today in the markets, it's concerns about the debt ceiling and the negotiations related to keeping the government open and functioning. That continues to be a kick the can scenario that I feel like we have to deal with every 6 to 9 months. And we are yet again having this discussion after having kicked the can at the end of last year. Despite softer CPI and PPI numbers than expected, showing that tariffs haven't necessarily had an inflationary impact yet, there's still concern about the uncertainty of policies and the speed of which the Trump administration is moving related to both DOGE and tariff policy.
A Reuters Ipsos poll of Americans conducted this week showed that 57% of participants believe Trump's moves to shake up the economy are too erratic, and 53% think the tariff war will do more harm than good. Thursday's stock moves included Intel, which jumped more than 14.5% after the chipmaker appointed industry veteran Lip-Bu Tan as its chief executive officer. Shares of Adobe dropped nearly 14% after the software company forecast quarterly revenue in line with estimates. And discount retailer Dollar General reported disappointing same-store sales estimates, but provided upbeat quarterly results, sending its shares up nearly 7%.